I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets. Where's the gold?
This is the Gold Newsletter Podcast. Fergus Hodgson, your host. Thanks for tuning in. I'm so glad to have Brian London with me today. If you have not already and want to hear more about precious metals, mining, economic freedom, please do consider subscribing on whatever platform you may be listening on. Today we have James Turk, who is up in New Hampshire but lives in London, and he is the founder of Goldmoney, goldmoney.com, and he writes the free Gold Money Report. That's just fgmr.com. Since he is such a knowledgeable man on gold as money, I almost want Brian to give an endorsement here. So Brian, welcome James, and let me hand it over to Brian to say give your legacy here a little bit.
Yeah, I know you don't want people to talk about your legacy, James, because you're still building it as we speak with your new book. But yeah, Fergus, James is a longtime friend of me and really anyone who has any savings built up. He is in my opinion, the foremost expert and authority on gold as money, both in history and where it stands today and the future. And no one better in my mind, no one more eloquent and experienced, and someone who's actually put their ideas into action through Gold Money. So tons of respect for James, and so very happy to have you with us today.
Thank you, guys. It's great to be with you.
And James, as we are in this era of inflation beyond even what I expected, let's say 6 months or a year ago, many people do think that maybe now is the time. Maybe now the US dollar is nearing the end of its days. Now, people have been talking about this forever. Is this time different?
No, it's never different. It just takes time for things to evolve, and it's taken much longer for things to evolve than I expected. Years ago when I started talking about the problems of the dollar. The problems actually started in 1971, and that's when they began accelerating. But the problems really began in 1933 when gold was confiscated by the Roosevelt administration and taken out of the hands of citizens. Where we are now is at the closing stages of a long-term bubble. Previous book that I had called the Money Bubble. Where people are using dollar currency thinking it's money. It's not money. It's only currency circulating as a substitute to money, which is gold and silver coin. In terms of where we go from here, the problems that have been building are continuing to accelerate. Back in the early 1970s, when that inflationary spiral began, President Nixon imposed price controls when inflation was 2%. Everybody was panicking at that level. Now 2% is considered to be the base acceptable level by the central banks, and we're at 8% beginning this cycle. Last time we ended up at 16% interest rates on the U.S. government debt. Who knows where we're going to end up on this time? But basically it comes down to, is the central bank going to support the dollar like Volcker did, chairman of the Federal Reserve back in 1979 and 1980? Or is it going to support the Treasury by continuing to finance government deficits and spending more money than it has? My guess is it's going to support the Treasury, which ultimately means the dollar is going to continue this collapse that it's on. Collapse being a collapse of purchasing power. An ounce of gold today buys the same amount of crude oil it did 70 years ago. You can't say that for the dollar or any other national currency, which continue to lose purchasing power over time.
Yeah, and that's a great point. I like a couple of things you said there. One is the fact that this is a trend that began back in the 30s, and really before 1933, before Roosevelt devalued the dollar. First, he took everybody's gold away to protect himself, to prevent them from protecting themselves from what he was about to do, which was to value the dollar by over 60%. So he basically confiscated everyone's gold, then devalued the dollar. And the trend began before that with overspending, deficit spending, and the creation of the Federal Reserve. But this is a long-term trend. And like water that goes around a drain, it's slow on the outside, but when it gets close to the drain, things move much more quickly. And that's kind of where we find ourselves right now at the culmination of this really very long-term trend. And if it seems long-term, but historians look back on a similar trend in ancient Rome, like the decline of the purchasing power of the Roman denarius. And it looks like it happened very briefly when you look back in perspective, but it's the same kind of a time frame we're operating on right now. My view, James, is I don't know whether it's this boom bust cycle or the next, but it's obvious where this trend is heading. It's just not obvious how much longer it's going to last.
Yeah, one thing that is becoming obvious as well is that there's increasing regimentation by the government. There are more restrictions about what you can do with your wealth, what you can do with your money. And that's a sign that we're nearing the end of the present cycle. Government restrictions to try to keep the system going a little bit further when the system itself has become unsustainable. And it's become unsustainable because of the central bank continuing to create this artificial purchasing power and giving it to the government, which the government then spends in competition with, the real world. People are out there working, day and night, earning a living, and having their earned purchasing power being depreciated, debased by this artificial purchasing power that the central banks are responsible for. And not just the Federal Reserve, but all central banks around the world are doing the same thing.
You mentioned that 1971 was a key date. There's a couple of great websites out there. One, I think is it what WTF happened in 1971? And another one, pricedingold.com, which isn't updated as much as I'd like, but I use a lot of their charts in my presentations, and it shows a number of things that, priced in gold, in other words, taking the prices, dividing by gold, the cost of an Ivy League education is the same as it was in the 1930s, if it priced in gold, and also priced in gold, the Dow and the S&P 500 haven't budged over 40 years, despite this monumental bull market. So it goes back to the idea that if you really want to see how things are, you look at it from a gold-centric point of view, that prices of everything, values of everything revolve around gold. And they don't actually alter that much when gold is the standard against everything else, against which everything else will be valued.
Yeah, that's exactly right. We have to perform economic calculation, not only in terms of dollars to determine the price of something, but also in terms of other currencies and specifically ounces of gold or ounces of silver to get a picture of what's truly happening. One way I like to explain this is I remember growing up in the 1950s, and my parents would drive the family car into the local gas station and fill it up with $2. And they could pay, 8 quarters and the car would be full because it was silver coinage back then. Well, today you can take the content of those 8 silver quarters and still fill up the family car with the value of that silver. But $2 doesn't even buy you a half a gallon of gasoline. So it just shows that gold and silver preserve their purchasing power over long periods of time. And that's why they're in the Constitution in Article 1, Section 8 and 10. People have lost sight of the fact that the first currency of the country after the War of Independence was the Continental. And the Continental ultimately collapsed into hyperinflation and created a lot of economic chaos at the time. One of the reasons why the framers wanted to create a more perfect union was to resolve these monetary issues. So they knew that gold and silver had to be the coinage of the country. And it was for more or less 175 years until the government started fiddling with it and changing it. So the sad thing that we're going through now, the sad thing that we're experiencing, is the same issues that the framers of the Constitution issued, back in the 1780s, monetary disruption, because we've abandoned gold and silver, just like they did during the War of Independence. We have to get back to the constitutional provisions, and that was a key element of the book, my new book, Money and Liberty.
And that's something we could do an entire podcast on, how to return back to gold. And I think there are a couple of avenues, and we should probably talk about that in the future. One of the things I wanted to talk about, you just reminded me of, that same website, Priced in Gold. If you look at all the charts of all these different assets and things priced in gold, the one chart that sticks out from all the others is the federal debt priced in gold. It is the one thing that gold has historically not been able to keep up with, except you see certain periods in that chart where instead of federal debt going up, it's dropped precipitously for a decade or so. And there are two instances where that happened, the 1970s and the 2000s, when people really began to be concerned about their purchasing power of their currency, or for whatever other reasons, gold played catch up in terms of its price. Each instance, it went up about 8 times in value. And then you look at the very end of that chart and you see another downturn beginning right about now over the last few years. So it seems like we might be trending toward another catch-up period in gold. I'd like to get your thoughts on that and how it relates to perhaps the value of the dollar.
Yeah, the debt burden is basically what you're talking about. The debt burden is too huge. And that's the reason why central banks moved interest rates down to, near 0%. It's because governments around the world can't afford to pay a fair rate of interest. Just look at the numbers. The U.S. government's revenue is just under about $4 trillion, $30 trillion in debt. Every 1% is $300 billion of additional interest, which is, almost 10% of the annual revenue of the government for every 1%. So is the government going to cut back $300 billion of spending if interest rates raise 1% on the debt? They're not. The Federal Reserve is going to create that, and that's how you get into the hyperinflationary spiral. It really just comes down to mathematics and the numbers. And the numbers are suggesting that, we're getting to the stage where it's no longer sustainable. You can't have fair interest rates with this debt load. So rather than doing what Volcker did and raise the interest rates to show that he was committed to preserve the value of the dollar, what we're seeing now is a lot of propaganda and discussion and promises and words being used to give hope that the dollar is going to preserve purchasing power. But if you follow the Fed's actions rather than their words, you'll see that it's just false hopes. And just as an example, the Federal Reserve is supposed to be cutting back $50 billion of its balance sheet this month. As of this date, we'll see what the numbers come out tomorrow. They actually increased $20 billion rather than decreasing. So if they really want to fulfill their commitment, they have to decrease $70 billion of assets in the next couple of days. And given what's happening in the T-bond market, and given what's happening in the stock market, the Fed knows if they tighten any further, they could be ushering in a historic stock market collapse. So they're walking on an edge. And what's going to be the consequence of this is the dollar is going to collapse or the dollar is going to survive. And I think the dollar is going to collapse as a consequence.
James, do you think it is just the dollar? My view tends more that it's not necessarily the dollar, but the whole fiat currency system, given the way the whole world is interconnected right now, that if we look at, say, the Roman Empire analogy, that it's not, Rome was the world back then. Today, the fiat currency that would collapse would probably, in my view at least, be all fiat currencies that would lose credibility, because at least in the U.S., the rule of law beats what's available in China, Russia, and most other places, really probably any other place in the world, whatever faults it may have, and there are many that still, the cleanest shirt in a laundry. So my view is more that it's a loss of credibility for fiat currencies in general. Do you think the dollar is going to lead that charge or lag that charge toward the bottom of the hill?
I agree with you that it is a global issue. It's not just the U.S., but I tend to talk in terms of the U.S. because for better or worse, it's still the world's reserve currency, although that role has diminished quite significantly in recent decades. But I liked your example about water sort of slushing around the top of a drain. Right now, the dollar is at the outer circle. In the middle of that circle is the yen and the euro. They're going down the drain much more rapidly. But eventually, all of them will go down the drain. It's just a question of timing. The dollar has been strong because the Fed has made some moves toward raising interest rates at a rate much faster than other central banks have raised interest rates. And that's what it really comes down to. All of this, the creditors out there, they're looking to get a return to preserve their purchasing power of their accumulated wealth. So they go to where the highest interest rates are, and the dollar has bounced as a consequence of that. And the yen, which is committed to maintaining low interest rates, has been the worst of the major currencies. But if you look at the commodity currencies, the developing nations, like the South African rand, Russia, of course, and even to a certain extent, Canada, which is pretty much a commodity currency, they've held up relatively well. So that's suggesting to me that, like the 1970s, the commodity currencies are going to be stronger than those currencies that are just relying on other forms of production within an economy, or have governments that are too highly leveraged and can't afford to pay fair interest rates.
I'm just still trying to grapple with what this so-called collapse will look like, right? Will that just mean that people begin transferring to cryptocurrencies, or they'll just behave more maybe like Argentina, where you just try to get rid of currency as quickly as possible? What's the next step in that process?
Probably going to be a combination of things, and who's to say how it's going to unfold in the future? Obviously, technology is going to have a role to play, and I recently tweeted that this drop in Bitcoin and everybody calling for its end is not unlike what happened back in 2001 after the internet bubble burst. Everybody said e-commerce was never going to make it after the bubble popped. And they're saying the same thing now, but I think the technology involved in blockchain and what cryptocurrency has to offer in terms of preventing or providing a currency outside of government control, I think, it's going to be around in whatever mix evolves in the future. But in the worst case scenario, look at Venezuela. That is potentially possible. Its fiat currency system collapsed. Government became increasingly regimented. Less freedom to people to act, to do with their accumulated wealth, to preserve their purchasing power, to try to get across the economic depression that was created because of a variety of different issues in that country. Every country is potentially vulnerable to the same type of scenario. Even a wealthy country like America, and I use wealthy in quotes because it's also the biggest debtor nation in the world. So how can it be a wealthy nation and be the biggest debtor nation as well? But remember, Germany, after the First World War, before, during, and after, was one of the most advanced, well-educated countries in the world. And its currency and economy collapsed in a hyperinflationary spiral. So to answer your question, Fergus, we don't really know how things are going to evolve. And that's the uncertainty of it. But in order to deal with this uncertainty, you have to look at things that have worked in the past, come what may. Gold and silver have been around for 5,000 years. They've lived through world wars. They've lived through depressions. They lived through, hyperinflations and all kinds of other things. So you have to have some physical gold and physical silver in your portfolio just to deal with this uncertainty that we all face. Because at the end of the day, what we want to do is we want to sleep well at night. And the only way you can sleep well at night is to have some aspects of your portfolio that are diversified so that you know that you can get across the valley come what may.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
This is the Inventa Capital Mining Update. I have with me Michael Konnert. He is the founder and chief executive officer of Vizsla Silver Corp. That's VIZSLA silvercorp.ca, and it's on the TSX Venture and the New York Stock Exchange. The ticker is VZLA. Now, Michael, I see you've had a few press releases out. What is the latest out of your Panuco project in Mexico?
Yeah, well, it's been a very busy 6 months for us here. The first half of the year has gone by, very quickly, but the company has done something that's really exceeded our expectations, and that's the discovery of the Copala Vein and then the subsequent drilling of that vein, and it's been an absolute game changer for us. So most recently, we put out some news, some very high grade silver over very broad widths, 20 meters, over 20 meters at over a kilogram silver equivalent grade. And so, I've been sitting here and you and I were chatting just briefly before the interview here and discussing, the state of the market and things like that. And I've been telling all of our shareholders and people that we've met recently that, this is an incredible opportunity to buy Vizsla shares. It's at a huge discount to the share price that we raised money at on the back of our discovery hole about 2 years ago. And since then, we've added over 100 million ounce silver equivalent resource. We've listed on the New York Stock Exchange. We've purchased our properties, so we own them 100%. Insiders have invested around $7 million, around $2.50. So about half of, we're half of that right now. So it's really an incredible buying opportunity. I know there's many of them out there, but this in conjunction with the news that we've been putting out over the last few months, it's just this is as much of a no-brainer as I can think.
Right, and do you want to tell people then what stage you're at in terms of the pipeline going towards development?
Yeah, so, originally, all along, Vizsla's vision has been to become a large-scale silver producer in Mexico with the Panuco project. And, I have a huge amount of confidence that this project will become exactly that, and online with other major mines in Mexico for silver and gold. But right now what we're doing is we're drilling these veins, the resources, in order to delineate a resource that we'll later put into a mine plan through economic studies and feasibility studies. So, originally we had looked at and envisioned the potential of using the existing production infrastructure that we have, the 500 ton a day mill, on the property. But, the scope of what we're discovering here far exceeds, the capabilities of that existing infrastructure. So right now what we're doing is we're drilling towards a resource update in the second half of this year. And after that, we'll move this forward through economic studies.
Right. So you're still establishing or expanding the resource you have on hand before you can really put the full plan into place.
That's right. All resource areas on the project are open for expansion along strike and at depth. All 12 of the wireframes that went into the March 1st resource were open. None of them were closed off. So we have a huge amount more to find and to drill here. But then as we're successful, I think we can utilize that production infrastructure, parts of it at least, to move very rapidly into production on a very large scale.
Right. Folks, the website is VZLA and as I said, the ticker on both the TSXV and the New York Stock Exchange is VZLA. You can learn more. They've got a couple of recent press releases out and to verify what Michael's been sharing. So otherwise, thanks for your time, Michael.
Thank you very much, Turk.
And, that's why when I talk to people new to the sector trying to get involved, I talk about gold not as an investment, but as insurance for your wealth, for everything you've built up. And it's insurance against not something you think may happen, like your home catching on fire, which you don't really think is going to happen, but you have insurance anyway. But it's insurance against something that's inevitable, something is going to happen. Only the speed and the degree of it happening is in question. So that's why you need to have some of that physical gold. But let's talk about that end game a little bit, because this is where it gets dicey, James. I'd like to get your feedback on it. I have the view that I don't know, and a lot of people out there, as you know, in social media, predict in a very detailed path of how it's all going to unfold. And I just don't think I'm smart enough to predict that. I don't think anybody's smart enough to predict that, given the vast number of variables. I just know you should own gold going into this, and that's the safest thing to do. But what about the end game? What's gold's role going to be in that? Will there be a need at some point to really instantly reestablish credibility for fiat currencies by connecting gold to gold?
Absolutely. Gold will have a role to play. It's been around for 5,000 years. It's natural money. It's a basic principle of my premise propounded in the theory of natural money. that gold is there. It's nature's money. Nature provides everything humanity needs to advance, including money, and gold and silver fulfill that role. So regardless what system we have in the future, gold is going to play a role. And remember, the country's been through this before. We were through it in 1780. We were through it in 1860s. The greenbacks were a fiat currency that was used to finance the war. And the economic turmoil that created as a consequence of the war and the greenback currency, Congress realized that they were going the wrong way, and they passed the Resumption Act. They had a plan that in 10 years they were going to go back to gold, and they did. Then in back to silver, because we were still on a silver standard back at that time, and they did. Then in 1900, Congress recognized that silver was no longer the international medium of exchange. Gold had evolved to become the leading money internationally, and introduced the Gold Standard Act, and we were on a gold standard from 1900, until 1933, and everything was changed in the Roosevelt administration. So gold is definitely going to have a role to play. If it doesn't have a role to play, there is no reason to be optimistic that all of these financial problems are going to be solved, and there's no reason to be optimistic that the liberty that we've enjoyed as individuals is going to be available in a system without money, natural money, without gold and without silver.
And I in your book explores this, the whole idea of natural money. And if gold, another one of the things I tell people is that the reason why I believe gold will be attached to currency and become money again at the end of whenever the end comes of this trend we're obviously on, is because nothing else functions like gold. If you were to say revalue gold right now and our friends at Incrementum AG who do the Gold Retrust report, great report. They have a chart that shows if gold were revalued to cover, say, 20% of M2, which is a minimal amount, I would think, to establish credibility of the dollar, it would translate to a gold price of, say, $10,000 an ounce. And of course, if you go up to 100% of far looser definitions of money, then you could get up to $70,000 or more per ounce. Gold is the only element out there that you could do something like that. You could revalue to those levels, and you would not destroy any industries. Jewelers would just lower the carat value of their jewelry to compensate. But other than that, there'd be no effect on the industry. There would be no other disruptions in the economy. It is, if gold didn't exist, you would have to invent it. And if you were to invent it, you would invent it with precisely the properties it has today. So it is the natural money.
Yeah, that's exactly right. It's all accounting at the end of the day. And the beauty of it is that the gold only comes into existence when it's profitable to mine. So you can't have huge increases. I've done an analysis going back to 1492 of the above ground gold stock. Back in 1492, the total above ground gold stock was a cube that would fit under a typical kitchen table. Now it's a cube that would slide under the arches of the Eiffel Tower. You remember, gold is not an investment. If the price of gold goes up, the purchasing power that's already been created moves from the hands of people who are only holding fiat currency into the hands of people who are holding gold. Gold is not an investment. It's a sterile asset. It doesn't generate cash flow. So any price rises are simply a debasement of the currency in which you're measuring the price of gold. And that's an important concept. People think that it's an investment, but it's not. I like your idea about insurance because what it's doing, it's providing you with that liquidity for your purchasing power. Once you work and earn purchasing power, you have to convey that purchasing power in the marketplace in a number of different ways. You can convey it with a national currency, or you can convey it by holding, gold and silver coin. Even though you don't really use gold and silver coin as purchasing as currency anymore, it still preserves your purchasing power. And keep in mind too, we were talking about cryptos and the technology. When we talk about paper currency, or even gold coins themselves, we're talking about currency of the past. Cryptos are currency of the future. Money is the same thing today it was 5,000 years ago. It's a weight of gold or a weight of silver. what evolves over time is currency. It becomes more efficient. It becomes less costly to use in commerce. And that's a good thing, because if you remove the impediments, the cost of dealing in people with currency, if you remove those impediments, there are more opportunities for commerce. And more opportunities for commerce is a good thing, because that creates wealth and raises everyone's standards of living. So we have to think, about how things are going to unfold in the future. Technology is going to have a role to play in currency. And I think ultimately we're going to be seeing gold moving around in a digital form, which was the original concepts behind gold money, because it's such an efficient way to use globally in currency. In other words, I could be sitting here in New Hampshire and pay somebody in China with gold instantaneously through the internet, by the gold staying in the vault, but moving from my ownership to the ownership of the payee in China. It's efficient, low cost, and avoids all of the counterparty risk that's now involved in the financial system. The counterparty risk that arises because of fractional reserve banking, and why gold is so undervalued, as you said, Brian, relative to M2 or M3, if you look at the total quantity of dollars out there in the world. So it's going to be interesting how this evolves. How it's going to evolve, I really don't know. But you have to look at technology in terms of what is going to happen to currency as we move forward from here.
Well, James, aren't you concerned that central bank digital currencies will be even more anathema to freedom than the current fiat currencies?
Yeah, absolutely. It's one of the worst things that come down the road. And it's basically my point about more regimentation. They're going to try to find more and more ways to be able to control the population, to keep this system going when it is an unsustainable system and is harmful, to individual freedom. Keep in mind, we work during the course of a year to earn purchasing power. The government says, I don't have to work for purchasing power. I just go to the central bank and they create it. These two forms of purchasing power, earned purchasing power that we earn and phantom purchasing power that governments create through central banks, compete with one another in the marketplace. And that's why currencies have inflation. That's what creates debasement of the currency. It puts us at a disadvantage. This is actually a point I learned years and years ago from reading a speech by Howard Buffett given in 1947. He's the father of Warren Buffett. He was a true sound money advocate, true lover of liberty. And he made the point in that speech that in order to control your government, you have to have not only free and fair elections, you also have to have control of the monetary system. And the only way to do that is to have natural money, which is what the framers of the Constitution put in Article 1, Section 8 and 10 in the Constitution. We've abandoned the wisdom of the framers, and we're now learning the consequences of what they went through after the war for independence, potential hyperinflation of the dollar.
Any final remarks, Brian?
Well, I think that, number one, we need to return gold as money. And there are a couple of ways to do that, either legislatively or judicially, that we should explore. And that's, I think, probably a topic for another discussion. But also, I think you've seen why I regard James as the foremost expert on gold as money in the world today. And so glad we were able to have you here, James. And so much we could discuss further and further. So I'd love to have you back.
I'd love to be back. Could I end on an optimistic note?
I thought it seemed optimistic to me for anybody who owns gold, but yeah.
But this is an optimistic note I think that everybody should be thinking about. The recent Supreme Court decisions have been very controversial, but they basically go back to what the original intent of the framers were. You have 50 sovereign states that have all of the sovereign powers except 17 specific powers delegated to the federal government. And that's what basically the Supreme Court has been moving toward. They've been putting power back in the states, taking away power from the federal government, which is what the framers of the Constitution intended. And, that's how you have individual liberty. My hope is that some point in time down the road, the monetary cases in the 1930s that were just whitewashed by the Supreme Court at that time during the Roosevelt administration will be reevaluated, and they'll go back to analyzing the monetary cases in terms of the nature and tradition and history of the country and make the proper decisions that gold and silver are in Article 1, Section 8 and 10 for a purposeful reason. And that's why the framers put it there. And that's hopefully why we're going to go back to gold and silver at some point in time in the future. So I'm optimistic about what the Supreme Court has been doing recently. Let's hope it continues.
Yeah, I agree on that. And I think there's only two things need to happen. They don't need to say that the dollar isn't money or isn't legal tender. They just need to recognize that gold is legal tender and should not be taxed. There should be no taxation on gold because it is in the Constitution. So it's not like you have to eliminate the dollar and go back to using gold and silver in your everyday commerce. Just let them compete side by side and see what happens. People would still use the dollar, but they could more effectively protect themselves through gold and silver because there would not be that taxation or limits on using it as money.
Yeah, competition is always a good thing, even when it comes to government, which is one of the beauties of having a confederation of 50 states with one federal government. If you don't like what the state, how you're being treated in the state where you live, you just move to a different state that's more amenable to your way of life. And we've seen this recently in Illinois. 3 big corporations have recently announced moves to Texas and Florida because they didn't like the way they were being treated in Illinois. That will be a lesson for the Illinois government they have to become more competitive if they want to have a strong economy. So competition is a good thing, even at the state level.
Okay, folks. Yeah, if you want to learn more about James Turk, go to fgmr.com or follow him at fgmr on Twitter. We'll have links to his books in the show notes at goldnewsletter.com/podcast. Otherwise, James, a pleasure to meet you. I hope we get to have you back on in the future.
Yeah, I'd like to do that. Thank you, Ferguson. Thank you, Brian. It's been really great being with you guys.
Same here. Thanks again.
Cheers.